Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your weekend video. So, a lot to get ready for the trading week. It just seems like a lot of headlines on the tape, a lot of things going on in the technicals, and a lot of observations to make watching aggressive call and put activity from last week. So let's start just with Friday's market activity. We really did a great job at taking a look at what I think was a nice tradable bounce on Friday. I really kind of sat on my hands until a couple levels were taken out in the major indices. If you did not see that, I put this out Thursday night. I talked about a level to watch in the S&P, the Qs, and IWM before I was ready to kind of commit to the long side and look for a reversion. So that's all detailed in that tweet that I put out on Thursday night. But this gave us a great signal for Friday, and we certainly profited, and we went after a couple trades in biotech and a couple other areas such as Netflix. A lot of traders in the room played that one. So really some great analysis that we did. As well as preparation for Friday's market activity, and that worked wonderfully. All right, so moving on to this week. Again, it's been I would say a challenging market to trade or to invest in. So you have to if you're doing the analysis and the research and things work out the way that you for the work that you put in for the week. That's a great thing, and that's what we're here to do, is basically get you ready for the week. So what do we see now? So S&P, just because we had that nice bounce on Friday, I think we need to see a little bit more follow through. I don't think that's a huge conclusion to jump through. We kind of have this hammer bar here, but we're a little bit below. This is non-dividend adjusted. We're below the 50-day moving average, which is the purple line. So we're kind of caught with, and I apologize, I don't have this on my Thinkorswim charts. If I jump over to Bloomberg, we're kind of caught in no man's land right now, and that's why I want to see a little bit more confirmation. We're just above the 100. We found support at the 100-day moving average, which is the green line, but we're below the 50-day moving average. So, I think this is a bit of indecision in the marketplace, and I would rather really participate in terms of investing once I've got a little bit more a clearer signal that we're retaking the uptrend. We are still in an uptrend, but I want to see a little bit of momentum for confirmation to the upside. I don't think we're seeing that right now, other than that nice tradable bounce that we saw on Friday. So there's a big difference right now that I think is one observation that we could take away from basically 2017 to what we're seeing after January of this year is that the volatility is higher than what we saw in 2017. Again, not a shocking observation that I'm making here, but just take a look at some of the ranges that we see in the candles. They're a lot bigger than what we saw in 2017. So the takeaway from this is that you don't need the same position size that you were dealing with. If you're trading options, you don't need the same position size that you were doing back in 2017. You could trade smaller size and still get the same bang for your buck. There's no reason to be trading, in my opinion, there's no reason to be trading the same type of size that you were doing in 2017 when the volatility was so much lower than it was. And again, this whole video is for information purposes. I'm not giving any advice or recommendation, but that's my particular feeling for that. Another takeaway right now is this is a great trading environment to day trade and to scalp positions, and that's kind of how we've flipped the switch a little bit in the trading room to take advantage of what the market is giving us, what's in front of us, rather than what we want to see, right? I mean, I love a trending market, and I love to be able to profit from it, but that's not what we have right now. So I can't continue to trade like I was trading in 2017. I have to adapt. I have to adapt to what the market is giving us. And right now I see great opportunities to scalp, at least while the VIX is... the VIX did drop significantly from where it was in the beginning of the day on Friday. We hit a 20, I think almost a 26 in the VIX early Friday morning, and we're all the way back to 19. So really, that's a big move in the VIX. I want to see some further confirmation to the downside. I think if we sit below here, below 20 for a couple days, that's making some progress. Really, what I want to see to kind of get back into that, trading options more as in investments than trades. I want to see the VIX get below this purple line, right? That would be a break of this uptrend line. Clearly, to get back below in here would be great, but what I'm really looking for is a move below, that 1560, which will change because you have a rising 50-day moving average. But that'll kind of give you the all clear signal that the volatility has definitely dissipated. So again, big difference right now if you're trading options, which I know a lot of you do. Big difference between holding those options as investments or just as a trading vehicle. Right now, I think they're trading vehicles, and I think getting out of them, maybe not every trade, but getting out of a lot of them at the end of the day, or at least a portion of the trade, makes a lot of sense to me. All right, so a couple things that we noticed on Friday. Small caps. Small caps were really ugly in the beginning of the week, so this is why it's kind of, this market is basically you have to analyze this by a day-by-day situation, because it is changing so quickly. So let me just make sure that this is up to snuff here in Think or Swim. Let me just try to zoom out. It's not letting me look all the way to there we go. Okay, so big green bar on Friday. So this is a good thing, right? I mean, small caps leading is small caps can also be from time to time are a leading indicator. It can sometimes lead the move. So a big move up here, up 1.6%. Again, just one day, so not a trend. So have to keep an eye on that. As well, biotech really came to life on Friday as well. So biotech, it's really been all about tech the last couple weeks. And I'm going to get into the sector scorecard in a second. That's where I want to go next. But really nice to see another group besides tech take some shape a little bit, and this led up 2.7%. I capitalized this. We noticed right away that that biotech was leading the way on Friday, and I traded this. I day traded this twice. I had two different trades that made some money in biotech. So again, option activity is what we watch for momentum, for trade ideas, but it's not the only thing that's going on in the world. There was no there was no major call activity in biotech. This was just something that flashed on my radar and looked like a really good setup. And sure enough, finished on the highs, up 2.7%. Now at this point, what I want to see is a little bit follow through. But hey, if you're looking for a trade here, I like easy trades. Even though biotech moves very fast, as long as you're being disciplined here, the 50-day moving average, this purple line, would make a great stop. So I think I did not put this trade on Friday. I actually talked about this late on Thursday in Thursday night's video, but I like biotech here. How great would it be if this group starts to catch a little bit of momentum? And it's not overbought. It's just kind of sitting just above the 50-day moving average. So I think a great looking setup in this group. Again, something different than tech. All right, so let me talk about, I've mentioned tech a couple times now. Let me kind of rehash that a little bit and just kind of look under the hood of the S&P 500 and look at the sectors and see how we're performing. This map, this sector scorecard, doesn't give you such a warm and fuzzy feeling here. We've got 5 different sectors that are below their 200-day moving average that I've listed as avoids. Or if you're a big time short, if you like to short things, I would have the 200-day moving average of these particular sectors be your stop on the if you were shorting them. I'm not shorting things right now. I kind of am taking a wait and see approach with the overall market, but certainly there's now 5 groups, and again, this is all your S&P GICS sectors, so not your subgroups or anything like that, just your main sectors that make up the S&P 500. One thing to note here is all of these sectors, 5 of them, only make up 20% of the S&P. So tech, by far, again, is the strongest sector, and there's a lot. I'm going to dig into the individual groups in tech and go through some of the strength in individual names and some of those and 2 of the groups in tech that are really, really strong. But that makes up 25% of the S&P. So it can certainly skew things a bit with that big of a weight, taking the place of 5 weak sectors that are only 20%. Notice that the next biggest sector is only 15%, which is tech, right? So besides these groups that look like avoids, which, by the way, if you kind of take a look at some of these groups, there's a particular theme that you can find in them is they're very interest rate sensitive groups for the most part. You got telecom, consumer staples, utilities, REITs. Those are very interest rate sensitive sectors. That kind of makes sense to what we're seeing right now as Treasury interest rates go up. There's going to be a less of a demand for your dividend proxy sectors, and all those sectors I would say fit into that theme. So that's, I think, a little bit of possibly, I'm justifying some of the weakness here, but I think that kind of makes sense as interest rates rise. I think there's going to be an exodus in some of these dividend proxy sectors, and we've certainly seen that in the ETF fund flow space. All right, so next up on the list, which I really view as neutral, healthcare materials. Those are below the 50 and the 100-day moving average, but above the 200-day moving average. So still in an uptrend, but not looking great, I would say. And then further up in that, you can see the groups in the yellow. Those are consumer discretionary, financials, and industrials. Those as well look weak using my proprietary momentum scan. They have negative ratings. That could flip around rather quickly, but I think for now, got to keep an eye on some of these areas. It looks a little bit dangerous to me that we've got a lot of sectors that are looking unhealthy to me, and tech is the only one that is the strong. So something has to give here next week. In the beginning of next week, tech can continue to do what it's doing. Maybe it pauses for a couple days and then goes up, but I think tech is super, super strong. If you're in some tech stocks, stick with the trend. They look very, very strong, and until they break down, let's not overanalyze and say, oh, maybe there's going to be a rotation. But still, I would stick with the strength until it doesn't become strength anymore, because certainly trying to predict when the FANG stocks break down or when some of these enterprise software groups break down, I think that's a fool's game. So for now, stick with it and hope that we see a little bit of other groups start to change. If tech starts to fall and we don't see that rotation out of tech and into some other groups, one scenario is that money rotates out of tech and just goes into cash. I think that would be an unhealthy outcome for the market, and then we'll have to reassess there and continue to kind of sit on our hands if that takes place. All right, so I think that's enough about sectors. This group, I think, like I said, stick with it. Netflix, which, looking at aggressive call activity, certainly has seen some really big chunky trades out in May. 52-week high in Netflix, stick with it. I detailed FDN here. This is the Internet ETF. I call it the FANG ETF because the FANG stocks are the biggest weights in this ETF, but super, super strong, right? Every time this thing seems to get a dip, we dipped into just to the 20-day moving average, and it rebounded quite nicely. So no 52-week high. I would watch the top of value, 124.91, for continued breakout. Amazon did not make a 52-week high towards the end of last week, but looks super strong here. And, I think another name that you want to stick with and buy dips at this point. Notice where it is right now. It's a tiny little dip, may set up well for next week. The other group within tech that I think is super strong is the tech and software group, or enterprise software group. This is the IGV ETF. This is an ETF that I've really been paying attention to for the last year. And names in this particular group are Salesforce, which made a 52-week high. Huge post-earnings aggressive option activity in this particular name. So, it looks like they want this name to go higher. I read an analyst report that said that this company's firing on all cylinders. Really, really nice to show kind of the business-to-business environment or small business environment. Really strong names like ServiceNow made a 52-week high. I've got a whole other bunch of names that I have, which if you're a member of Tribeca Trade Group, you're going to see these in the Swing Trade Setup channel. A whole bunch of setups that I like in this particular group, some of which have broken out, some have not broken out yet, which is where the focus is for me. Autodesk, a name that I'm watching for next week. That reports on 3/6. We have seen option activity, but it's tough to read option activity into earnings. But I like how this name is not anywhere near 52-week highs, and if it has a good quarter, I think it pops, and I will probably be positioning for that next week. I've already talked about biotech, so I'm not going to rehash that. Sector flows. Tech, again, has been where there's been a lot of money that we've seen the last couple of weeks. Actually, financials saw the biggest inflow of any sector last week, $693 million. So good to see another group. What I'm watching as well, besides biotech, is the KRE ETF. That's the regional banking ETF. Whoops, wrong symbol there. Also showed some signs of life. Was started the day on Friday one of your worst performing sectors. And kind of looks like that biotech chart, doesn't it? Which again that's kind of weird. Well, maybe not so much. Maybe I'm reaching there a little bit, but still nice support of the 50-day moving average, and certainly in an uptrend, not overbought, just a bounce from the lows. Makes sense to me. Again, how I would play this along in cash, and your stop right below that 50-day moving average, that purple line. Again, another easy trade, in my opinion. All right, so let me get into the option activity. Just a couple charts that don't look so good. I talked about looking under the hood in the S&P. Yeah, I mean, some groups, take a look at what's been going on in the industrials ETF. Some of the biggest outflows that it's seen since, this one-day outflow that happened on originating from from Thursday's price action. This was over a $700 million outflow that happened between the 2 days. So really a lot of money being taken out of industrials and done so quickly. One thing to note in terms of option activity, there hasn't been any. This is the sector. This is the option activity that I put in the newsletter from dated 2/25. Notice how this group was blank. It was kind of a mystery to me why we haven't been seeing any industrial really aggressive flow. But so what the takeaway from this is, don't go into areas of the market, for me anyway, that are not seeing any aggressive paper into. Why force a trade if there's no buyers there, if there's no aggressive buyers in the market? So same thing for this week. I actually made this group just because it looked so blank. I actually made this, I think, industrials and transports, and really the EMR was the only name where we've seen aggressive repeat activity. American Airlines has seen repeat call buying, which is a transport name, and then UPS, which saw some dip buying last week, which worked out nice, I think, for a trade one day of the week last week. A couple other groups that are really suffering a bit is the home builders. It's the ITB is the home builders ETF. Notice it's right at the 200-day moving average. The home builders are, I think, 60% of this ETF. The other ETF that has home builders in it, which is actually called home builders but is more retail and building materials, is also breaking down here, and that one's actually below the 200-day moving average. So something, again, just doesn't feel right about this group breaking down. Clearly, interest rates moving higher are a headwind for home builders and some names in this group, but a pretty severe move, which we saw. If you read my Twitter page frequently, I mentioned that there was a ton of outflows in the ITB ETF. Now it's basically almost about a month ago, I would say. But clearly there was a lot of money being taken out of this group. Yeah, it was the end of January, beginning of February that happened up here. So kind of feels a little bit about, feels similar to that industrial, a lot of money coming out of industrial. So until we really see some aggressive call buying and some money kind of rush back in, not to say they can't buy the dip in this group, and names like Home Depot and Masco and Lumber Liquidators, all those types of names. But if you're a member of the room, we're going to see that right in front of us, right? I mean, that's one of the beauties about watching the tape and reading call activity, is you're going to see the first indication of buying in the dip if that happens by being a member of Tribeca Trade Group. So that's one of the names that's one of the areas that I'm watching for next week is this group that's been so beaten up and the price is into the 200-day moving average. I'm also looking for industrial flow, basically any flow that's just outside of tech. I'm going to continue to capitalize on tech, and I'm still holding Micron, and have made a lot of money with some of those semi names, including Micron has been a big winner for me that we've caught, and some of the other flow that we've seen. So of course I'm going to pay attention to that, but I want to observe to see if some other groups are going to be bought. You could see for financials, it was pretty. It was a pretty slow week. BAC does. Probably 2 days last week saw some aggressive call activity. There was one day where we actually saw a little bit of JP Morgan and a little bit of Citigroup, but not enough to really make the list. AIG, I don't know why they were buying March 23rd calls, but maybe keep an eye on that name next week. It has gone down since they bought calls in that one. Ali's another name in the group that saw aggressive call activity. In the material space, obviously steel in the headlines, as well as saw a lot of option activity. I thought the AKS trade was a pretty good one. That was a block of, I think, I'm going from memory here, but I want to say 40,000 calls that went up. Also, a couple other names. Deere was a name that saw aggressive call activity. Besides that, you could see that the overall takeaway from this list is that it's not a huge list. We just did not see a couple of days. It was very quiet in terms of option activity. Here it is: 40,000 of the April 7 calls were bought for 21 cents. So a nice little lotto trade, I would call, for around 20 cents. In the consumer name, I skipped this group, but it continues to be names like Win and MGM that are seeing call activity. ILG saw a nice call spread after post earnings that went up. Also, Constellation Brands. This was a trade that I took last week. I figured it's nice to own something different than technology that saw aggressive option activity. Really like this chart. I mentioned when I got into this trade, I got into it kind of on the smaller side, waiting for a little bit of confirmation. This was when they started to buy those calls a couple days. I mean, look at the size of these trades that went up in STZ. I'll just bring up the 5 days. But you could see July 220 calls. Look at this, $3.8 million. Another one, July, same strike, 220 calls. This was another $3.5 million. And then that was on Tuesday. And then they came back in on Thursday and they bought more at 1280. So just as this thing was kind of, was down on the day, they went in and bought more of it. So I always like to see that once I'm in a trade, when they come back into weakness and buy more. Notice where this thing ended on Friday, above the 50-day moving average. So again, 50-day moving average, let that be your stop, or maybe the top of value for March, which is 218.45. But I would say one of my favorite names for last week. Just to kind of detail that tech space a little bit more, I mentioned Netflix was a huge one from last week. They actually bought those. I think we saw the May calls a couple times that went up, but certainly that was one of the best trades that I saw from last week. Also, the Salesforce, big chunky call flow went into Salesforce.com post earnings, and you could see 52-week high, just as I have in the newsletter. And then a couple other names. I would say after you get past Netflix, Salesforce, Micron, Intel, then it kind of becomes a little bit small in terms of some of the trades that we saw. We did see some repeat Cisco activity, a little bit of short-dated Lam Research calls, a name that we really haven't seen that much call buying in since they reported earnings. NetTap, a small trade that went up there. Applied Materials, once or twice we saw that one in the beginning of the week. PayPal. PayPal, I did get into a trade in PayPal. One of those exercises of just reducing risk. I did get out of PayPal once it kind of turned here. I took some targets, 2 of them on Wednesday, and then got out of the trade on Thursday. I didn't like, I was looking for this thing to continue. I can certainly get back into this name, but it was an exercise of risk management. Plus, I was in an April trade, so those are the first that are going to go for me, the shorter dated option trades, considering this market volatility. Twitter, what a great looking chart this looks like. Also a name just like Micron that was exhibiting some nice relative strength. And you could see it kind of looks like a nice flag pattern, and it's starting to resolve itself to the upside. So definitely a name to watch for next week. All right, so that's today's video. I also have for members in our swing trade setup channel in Slack. I've also got a couple small tech names that I'm watching that I think the setup is really good. I actually like the smaller cap names right now because if we do get another washout where there's a decent chunk taken out of the S&P in terms of outflows, the smaller cap names might be perform a little bit better, considering that they're not, of course, they're not in the S&P 500, so there's a little bit less overall exposure there. If we happen to get some volatility in the beginning of next week, I think some of these small cap names might actually hold up a little bit better, considering that they don't have exposure in the S&P 500 or in the major indices. All right, so that's what I'm watching next week. Again, you have to be a member to check that out, as well as our market analysis. I think we played Friday beautifully, and I'm looking to achieve the same results next week. So have a great day. Enjoy the rest of your Sunday, and hopefully see you in the trading room on Monday morning. Have a great day.